We're going to review the freeandclear.com Lender Mortgage Qualification Calculator, which is a mortgage calculator that allows you to determine what size mortgage you qualify for from a lender's perspective. To find the Lender Mortgage Qualification Calculator, simply click on the Mortgage Calculator tab on the top left of any page on freeandclear.com, and that'll take you to a page with the list of all the calculators available on Free and Clear. The Lender Mortgage Qualification Calculator is listed under Home Purchase Mortgage Calculators. If you click on the triangle to the right of the calculator, it reveals a brief description of the calculator. I'm going to go ahead and click on the title, which will take us to the calculator page. Before we review the inputs and outputs, I want to briefly explain how the Lender Mortgage Qualification Calculator works. In order to determine what size mortgage you qualify for, lenders typically set limits for how much of your gross income you can spend on total monthly housing expense and total monthly housing expense plus other monthly debts such as credit cards, auto, and student loans. Monthly housing expense and monthly housing expense plus other debt as a percentage of your monthly gross income are called debt-to-income ratios, and lenders look at these two debt-to-income ratios to determine what size mortgage you can afford. As you can see from the way the page is laid out, the inputs to the calculator are on the left-hand side of the page, and the outputs to the calculator are on the right-hand side of the page. The inputs are the information that you provide or select, and the outputs are provided by the calculator after you click the Calculate button. I'm going to walk through the inputs one by one. It's important to highlight that if you ever have a question about an input, simply hover your cursor over the icon to the left of any input rectangle, and it reveals a brief description of the input and the information required. The first input is monthly gross income. We want to emphasize that this is gross income, so your income before any deductions such as taxes, Social Security, and Medicare. Lenders focus on your gross income as opposed to your net income or take-home pay. I'm going to input $6,000 for monthly gross income. The next input is total monthly debt, such as car loan, credit card, or student loan payments. Any recurring debt that you pay on a monthly basis. I'm going to input $500. The next input is interest rate. If you hover your cursor over the icon to the left of the drop-down menu, it shows the current interest rate for a 30-year fixed-rate mortgage. In this case, the current interest rate is approximately 4.25%. If you click on the drop-down menu, it reveals a wide range of interest rate options, and I'm going to select 4.25%. The next input is mortgage term, or the length of the mortgage in years. If you click on the drop-down menu, it shows a range of options from 10 to 50 years. I'm going to select 30 years because that is the most common mortgage term. The final input asks if a property requires a homeowners association fee, also known as an HOA fee. If you're buying a condominium or a property in a multi-unit development, in many cases you are required to pay a monthly fee for the maintenance and upkeep of the development. In this case, I'm going to select no. We're not required to pay a homeowners association fee. We have submitted all of our inputs, and I'm going to click the Calculate button, which will produce our outputs. The first output is the estimated mortgage amount that we qualify for based upon our monthly gross income and our total monthly debt. The second output is the estimated monthly mortgage payment, which is based on the mortgage amount that we qualify for and the interest rate and mortgage term that we've selected. The next output is estimated total monthly housing expense, which includes your monthly mortgage payment plus property tax and homeowners insurance expense and homeowners association fee if applicable. In this case, we selected no homeowners association fee. The total monthly housing expense is calculated as 37% of your monthly gross income. Although it's not a hard and fast rule, lenders typically allow you to spend a maximum of 37% of your monthly gross income on total monthly housing expense. The last output is our 45% rule check, which looks at total monthly housing expense plus your total monthly debt as a percentage of your monthly gross income, which is also known as your debt-to-income ratio. Again, there are no set rules, but lender guidelines typically allow you to have a maximum debt-to-income ratio of 45%, which means that you can spend a maximum of 45% of your gross monthly income on your combined monthly housing expense and other monthly debt, such as credit card, auto, and student loans. Some lenders require a debt-to-income ratio below 45%, and some lenders allow a debt-to-income ratio above 45%, but 45% is a good rule of thumb. It's important to highlight that you can run different calculator scenarios without having to refresh the page. So in this case, I'm going to change monthly debt to $1,000. I hit the Calculate button, and the outputs update automatically. After you've reviewed the calculator scenarios that apply to you, you can click on the Compare Lenders button at the bottom of the outputs and review a table with interest rates and fees from lenders in your area. If you have any questions about the Lender Mortgage Qualification Calculator or any other mortgage topic, you can always click on the Ask an Expert button at the top of any page on freeandclear.com. That will take you to the Free and Clear Ask a Mortgage Expert feature where you can submit your question. The feature is free to use and we never spam. Thank you for reviewing the freeandclear.com Lender Mortgage Qualification Calculator.